How's it going, everyone? Today, I'd like to make a comprehensive video, somewhat comprehensive, on the cost of AI state-of-the-art LLMs and making a bear case for as to why these declining costs over time is going to be turning out to be a very bearish catalyst. So, the whole AI bubble right now is propped up by these big hyperscalers, as they call them. So the Mag 7 companies, Nvidia, Meta, Google, etc., etc. They're all going pretty much all in on this technology, and they're pouring hundreds of billions into them. Now, when I say they're pouring hundreds of billions into them, most of that money is going straight into Nvidia, right? Um, these AI companies, like for example, Meta is building a data center. Those data centers get filled with Nvidia GPUs. They're incredibly expensive. The current Blackwell series of cards, their latest ones, cost $35,000 per GPU. The NVDL2 um, entire comprehensive system costs over $500,000. So these data centers are getting filled with incredibly expensive equipment that has both a lot of depreciation, as Michael Burry has spoken about, and a lot of costs and electricity and, the water that it takes up to a lesser extent. Now, what is really concerning is not really the depreciation, as Burry said, though I do believe it is cause for concern, but that's also a lot more difficult to track. What's really concerning to me is the depreciating costs in training and running these models. So over time, as with everything, products get commodified, right? Meaning that they become cheaper and cheaper and cheaper, and it's a race to the bottom, so to speak. So when you're dealing with, tech and software, the understanding is that it is high margin, it is incredibly profitable. Like Nvidia is getting over 50% margins, for example. Um, and just basically for every dollar you put in, you're going to get quite a couple of dollars out of it. Like for Nvidia's case, every dollar they put in, they get 50 cents out of it or so. Now, at that current profit margin is largely because the industry believes that they need to buy these NVIDIA chips in order to stay relevant. As time is going on, though, it's getting more and more competition. Google has been releasing its TPUs and training its own state of the art model, Gemini 3.0, as well as all the other ones on their TPUs only. And the costs are incredibly low on the Google TPU compared to the NVIDIA GPUs for both training and inference. And now that begs the question, can these profit margins really stay at the insane valuations that they're at? And if not, then what is the result of that going to be? And tell you right now, the result is going to be that the market caps are going to drop quite significantly because they market caps are largely pricing in not just the current profit margins, but increasing profit margins at that, because that has been the historical trend for these companies, especially companies like Nvidia and Google, Microsoft, etc. But how is that possible when LLMs are costing less and less as time goes on? So let's just look into it. For example, we'll go into ChatGPT 3. This was the big model. When this came out, everything kind of changed. So ChatGPT 3, in order to train it, it was around $4.6 million in cost, right? The input costs for 1 million tokens, meaning that 1 million tokens as an input, how much would that cost? it was 20 bucks at the time. The output was also 20 bucks at the time. So again, it was the first massive commercial model. It established the scaling laws that we know of now. Fast forward 2 years, we get ChatGPT 3.5 Turbo, and you can see immediately this huge reduction from input costs of $20 to 50 cents per million tokens. That's a huge, huge reduction. Output costs over here, $20 to $1.50, right? So almost a 10x reduction, 20x over here. Insane, right? This obviously allowed for OpenAI to expand much more. It allowed them to create free models that really pushed their market share further and got their foot in the door into more consumers' hands. Then you might say, okay, but GPT-4 costs $30 and then $60 for input and output. But then you can see kind of this trend holding up of, 250, then 5.0, which is just better than GPT-4 and anything that came before it. And look at that, a dollar again, $10 for output. GPT 5.1 just came out last month. It's $1.25 now, and again, $10 for 1 million tokens of output. So costs are decreasing, training costs are increasing. Now, what that means is that they are putting more money into, and you'll notice this trend generally, more money is being put into training, more money is being put into the data verification, more effort is being put into compiling all the data and the training process and refining it. They're also doing reinforcement learning, which is just repetition of the inference and training process. And so a lot of the costs are front ran during the training. And that results in cheaper compute costs for when the model is actually running, right? So you put in more at the beginning for training, and it costs less later on for when you're actually running the model. So really and I'll go into the other models first before I talk about this, but Gemini 1 came out, training cost was $191 million. They gave it for free at first just to get their foot in the door, similar to OpenAI, but they could charge because they were the first LLM. These others, for example, like Kimi and Gemini at first were incredibly cheap, if not free, just so that they could get their foot in the door. But now, they have to return some profits, so obviously they're charging. But the costs and what they're charging is incredibly cheap, right? So Gemini 3.0 Pro, which is a thinking model and is better than ChatGPT 5.1 right now, costs $2 for input per million tokens and $12 for output, right? So more expensive than ChatGPT 5.1, but nonetheless, when you look at the iterative costs over time, it's been going down roughly, especially when you consider the performance, right? So again, you might say, oh, $2 per million tokens input, that's more expensive than any other iteration. True. But then consider that ChatGPT or Gemini 3.0 Pro outperforms 2.5 Pro and 1.5 and 1.0 by leagues and leagues. Like as much as 2 to 3 standard deviations higher in terms of performance. And then you start to, assess it as in that context and realize the costs are coming down exponentially. Likewise with Anthropic, they have probably the best coding model out right now. And again, Anthropic, when it first came out, $8, it spiked at Claude 3 Opus for $15 and then $75 for input and output. And now with the latest model that's come out, and actually this doesn't even include the latest model because they haven't shown quite what is available for Claude 5.0 Opus. But it's $3 and $15 for input and output. Again, when you compare it to the performance of the LLM and what you're getting out of it, the costs are going down incredibly while the performance is going up a lot. So when I'm looking at this, like, I'm not bearish on AI whatsoever. I do believe it's gonna create some huge productivity benefits, and put a lot of people out of business, to be quite frank, and out of jobs. What is bearish, however, is the fact that they have, and by they I mean these hyperscalers and just the whole economy at large, are pouring in hundreds of billions of dollars into these giant expensive data centers, where the products are again depreciating at a rate of like 3 to 6 years maximum, while performance is just getting better and better and more efficient. So the question becomes, are these evaluations and the spending that is occurring with these models, is it really even necessary for how much the technology is improving? You see, it's not that the technology itself is bearish and anyone should be bearish on the tech. It, people should be instead bearish on the spending that's coming with it, because what we're realizing, especially with these Chinese models that are coming out like DeepSeek and Kimi, is that costs are going down incredibly, incredibly high or low, while performance is boosting significantly. And the latest example of that is with DeepSeek. So DeepSeek just released their version v3.2 on December 1st. Look at these costs. So if you don't know, DeepSeek v3 currently outperforms every single model. If if you want to get specific, it's really relative to it, but on most major benchmarks, it's right there neck and neck with them, if not outperforming in some major benchmarks. While the costs are incredibly cheap. I mean, 28 cents for a million token input, 42 cents for a million token output. Meanwhile, look at Gemini 3 Pro, $2 and $12. So this is literally 1/10 to 1/20th of the cost, um, for similar performance. And when we look here, for example, here are the benchmarks between GPT-5, Gemini 3.0 Pro, Kimi K2, and then DeepSeek V3 thinking, and then special. This is a more specialized model that's again, like more specialized for specific tasks. The data and training is much more optimized. So you can see over here, these are the different benchmarks and then their performance. DeepSeek V3 is on the special model, which is a little more expensive than the thinking. It's outperforming every single model over here, whether it's GPT-5, 3.0, Gemini, Kimi K2, and look at the costs. It's doing it for one bare minimum 1/5 to almost 1/20th of the price, right? China's and their open source models, and that's another thing that we have to keep in mind. It's that China is releasing these models, DeepSeek V3, Kimi K2, and stuff like that, as open source models. Okay, all these software benefits that are coming to AI and LLMs are open sourced. Therefore, just like when DeepSeek V1 came out, they are going to be implemented into existing LLMs in a heartbeat, right? Um, and once that happens, their costs are going to go down significantly too. In fact, I would argue that a lot of the cost saving that came from the latest models was only prompted because the Chinese implemented it and then showed the American labs how to do it, right? I'm not going to get into very many specifics, but DeepSeek V3, the team when they launched the original DeepSeek, they they literally went down to the machine code and found, for example, some optimization errors, and showed it to the Nvidia team and said, here's how you can optimize your CUDA software to make it even more efficient. And here are some things that we did with your GPUs to make it even more efficient. right? So take that into consideration and ask yourself, if we are getting a reduction of 10x, let's say every 1 to 2 years in costs, then are the valuations for these um, firms selling AI chips, specifically Nvidia, right? Is Nvidia's $4.5 trillion valuation worth it, right? And a lot of the market is starting to call bullshit now on that. And here's what I mean by calling bullshit on it. Looking at the Nvidia chart, Nvidia has been forming lower highs, lower lows, is far from its all-time high at 213, or sorry, 212, while Google has been setting new all-time highs pretty much every week since Gemini 3.0 got not just announced but rumored. So what is that showing you? Well, put the pieces together. Google is creating models that are better than ChatGPT and better than Anthropic, which are mostly running on NVIDIA GPUs. Anthropic is switching to Amazon Trainium 3 GPUs pretty soon. But nonetheless, that's still a reduction in cost. Again, so it still supports this thesis. Um, so the NVIDIA camp of LLMs are lagging behind now the Google and non-NVIDIA trained models and run inference ran models. Meanwhile, the non-NVIDIA ones are pumping like crazy. Google, because of its TPUs and the cost effectiveness on that, has been rising and setting new all-time highs. So what we're starting to see now is two camps in AI form. The NVIDIA camp that's tied to OpenAI, Oracle, CoreWeave, and all these companies. And keep in mind, these are the companies that have had hundreds of billions of dollars poured into them, right? On the expectation that NVIDIA can't be dethroned. NVIDIA uh, has the market by the balls and they can just continue charging $35,000 for a GPU, that they can have companies on wait lists, that they can, there's several stories coming out of like NVIDIA literally having the market by the balls to the point where they get insights into technology releases from these different companies like Anthropic and ChatGPT and stuff like that, and even Google before they announce it in public, because Jensen would punish them with less GPUs if they try to get one up on them, right? That stranglehold on the market is very quickly dying. And unless NVIDIA starts to take the approach that Google is, that Amazon is, that Alibaba is, that is making both cheaper cards and more efficient cards, then it's simply going to be outcompeted, because companies are realizing I don't need to actually spend hundreds of billions on all this infrastructure, because I can do it for a fraction of the cost with Google TPUs or Alibaba GPUs, or more hyper specific ASICs that are coming around, right? This doesn't even get into the idea of ASICs. So what are ASICs? I made this little table over here to just explain everything in detail. You guys can pause and take a look at it for yourselves to understand. But basically, ASICs are this application-specific integrated circuit. They're, as the name implies, application-specific. So they are hyper-optimized for one single task, right? And they are, because they're optimized for that specific task, they run it much more efficiently. And ASICs and TPUs are NVIDIA's biggest threat. In fact, Jensen talks all the time about ASICs, and whenever he mentions them, he does seem kind of scared. Though he says specifically that his argument is that, well, the GPU is not as efficient at one specific task as an ASIC is. However, the GPU, because it is an all-around good processing unit. And because NVIDIA makes the best all around processing unit, that is simply better to buy NVIDIA GPUs because you can use it for your training, your inference, your token compute, etc. For from the bottom to the top, the whole process. Now, regardless of what happens, okay, commodification will occur. And so, because commodification will occur, that means that prices will go down regardless, and specifically profit margins will go down. And so, what happens over time is that we're now in this, I wouldn't call it a bubble yet. These companies are still making a fuck ton of money. It's not like 2000 where they're, at ridiculous like 500x PE ratios. Some are like, for example, Palantir. That's why it dropped like 30% recently, especially after the Burry short. Um, no, these companies are making money. They have good cash flow, some better than others. Like Meta, for example, is in a dog shit condition compared to like Google, right? Or Oracle, for example, is complete horse shit. But the main argument I'm trying to make is that over time, I'm willing to bet that this NVIDIA moat is going to be going down one way or another. Whether it's because they have to cut down on costs to be competitive with others, or because the amount of compute and money needed to train these models and run these models over time goes down. Regardless, the only thing that I foresee for NVIDIA is down. It's down. There's no way that they can continue raising their profit margins to this extent. There's no way that they can continue to charge $35,000 for a single GPU, while as long as there are both other companies that are competing to reduce the costs, and um, as long as the scaling laws hold up, which means that AI and LLMs will become cheaper and cheaper and cheaper over time. So, what does that mean for the market as a whole? Well, that's the money question, isn't it? Is the market going to be going down because now it has collectively realized that there's overspending in AI, and it's not necessarily even the case that AI is not going to be fulfilling its promises, but that we can do it at a much cheaper cost, and therefore some valuations need to really be reassessed? Or is it that money will start flowing in and simply do a capital rotation? So from Nvidia and OpenAI related stocks into like Google related stocks, into competitors like Intel, for example, ALab, Broadcom, these companies that are pivoting towards ASICs and foundry positions and everything. So which one will it be? I don't know. Um, I'm somewhat leaning towards there being a lot of pain because I don't see how we can have a smooth transition of capital from Nvidia controlling a $4.5 trillion market cap, and then all that money just perfectly efficiently moving from Nvidia to the beneficiaries of this commodification cycle that we're seeing without causing a lot of volatility and potentially the market to crash a good chunk. So that's just my take on it. Yeah, I am I bullish on AI as a technology? Yeah, I think the investment came because of the promise. I don't see the promise of AI really going down. It might take a little longer than is expected. The keep in mind the promise of AI is to literally put you and pretty much everyone out of a job, right? That's the goal. The productivity benefits from AI is, I mean, they won't maybe say it directly. A lot of times they do, but it comes in the form of laying people off, right? And then people say like, oh, there will be new jobs created, the economy will change, but everything is good. But let's just be real, right? Uh, the whole it's artificial intelligence, right? It's supposed to be a cheaper replacement of the mind. Okay. And when you can have agents, which is going to be the next big thing, continuously running agents that can interface with the internet and different tools and everything, running 24/7 at, you know, 28 cents for a million tokens input and then 42 cents for a million token output, and it's performing relative to the best LLMs right now, then simply put, there's not going to be much reason to hire that high six figure white collar employee that's basically just an edge case protector and pushing emails and doing Zoom meetings all day, right? So, nonetheless, though, with that in mind, I think that there is massive amounts of overspending in AI, especially now that we're realizing that costs are nowhere near as much as we thought. Um, and keep in mind, by the way, this does not have anything even to do with the other macro events or even micro matters when it comes to AI. So things like, for example, the energy bottleneck, right? There is a huge gap in data center build out promises and contracts and what the energy grid can support, to the point where right now a lot of local counties and such are straight up saying like you can't this data center that you have um, like contract to build out and everything and approval for it, you can't do it. Why? Because our energy grid simply cannot support it. And so if you try to do that, you're gonna blow the grid out, right? So it's not even factoring the energy grid bottleneck. It's not even factoring in the macro state of the economy being like utter dog shit. The consumer being completely beaten up and busted down, you know? So all that is to say, I do think that we're gonna see a correction of sorts. Out of it will come different winners than the AI cycle has previously seen. I think Nvidia, while it's still going to be obviously a relevant company, they still make the best GPUs by far, no questions asked. Nonetheless, though, that does not mean that the GPU is the end all be all, right? We have TPUs, which we know for a fact are cheaper, okay, at similar price performance. And again, these TPUs are not just like some, what if technology. The current top three, out of the top three LLMs, the big three, ChatGPT, Gemini, and Claude Opus. Okay. TPUs are powering Gemini 3.0 Pro, and that is currently the best performing all around state of the art LLM, the multimodally, right? It's if you factor in multimodal function, that is like, text to image, image to text, and audio and all of that, Gemini 3 Pro is still better than Kimi K2 and DeepSeek V3 and such, because they haven't focused on multimodal as much. Trust me, they will pretty soon, but they're building out their efficiency first, which is, I think, a smarter move. But again, the GPU is not the end all be all, and too much has been staked on the promise of Nvidia and the GPU, and this idea that if you don't rush and get the $35,000 Nvidia GPUs and spend hundreds of billions on them, and if you don't, pay over to the Nvidia cartel, that you're just gonna be stuck in the mud and completely like irrelevant. That is not the case anymore. We know that is not the case. That's why companies like Google are popping off. That's why companies like Broadcom right now are performing well relative to Nvidia, which is like 20 something percent from its highs, right? So, or it's not 20 something percent, it's less than 20, but nonetheless still not a good looking chart and not performing as good as the other AI leaders right now, which are just taking over the narrative. So that's my case for as to why I can I'm predicting a bigger correction. Look, if I end up being wrong, and we have a couple of good macro backdrops as well. Like for example, quantitative tightening is ending, so that means the Fed is stopping the reduction of its balance sheet. That does not mean QE is going to begin, as in the Fed is going to be increasing its balance sheet. That just means that they are actively not uh, pushing a policy of balance sheet reduction. So, we have that. Corporate tax cuts kicking in, a very pro business administration with Trump, potentially expansion into Chinese markets if they can figure that out with a trade deal. And honestly, the whole trade deal stuff is just like another set of like real bullshit that we can't get a guess on. We hear trade deals every fucking week from Trump. Nothing has been signed yet, by the way. I'm just gonna say that nothing has been signed yet. We had a EU deal announcement that is not official. We had a China deal announcement, not official. Even the Swiss deal announcement, which should be something insignificant and easy to do, nothing. So none of these deals have been signed off yet. I feel like a lot of the market, this rally up until now, has been pricing these things in because, well, it moves up on news that this stuff is coming out, right? So how am I not to assume that these deals that are not inked in paper yet are being priced into the current price, right? But nonetheless, if they actually do come to fruition, if these positive developments can happen, if QE starts again, if the Fed starts printing like crazy, if we get some sort of economic stimulus in the form of a congressional bill or something, then I can see the market going higher and higher simply because liquidity is going to be there, right? But as a whole, we haven't seen them yet, and given so far what's been taking place, and the over concentration on Nvidia, and then its uh, hyperscalers that have been so reliant on it but are easing off recently. I believe that some form of correction is due. Thank you all very much for watching. Hope you have a great rest of your day.